Hi everyone, this is a technical analysis on USDJPY. Let's start with a fundamental overview first. Yesterday, the yen strengthened across the board in the Asian session without any clear catalyst. It looks like it was more of a technical move as the price broke through a key trend line rather than something fundamental. On the other side, there might be some pre-positioning into a dovish Powell speech on Friday, as he will likely pre-commit to a rate cut in September. In the big picture, though, rate cuts into resilient growth should boost economic activity and keep long-term yields high. Moreover, the risk on sentiment should also weigh on the yen, as the carry trades will still be a better option. So, although the picture is a bit murkier with Federal Reserve rate cuts and potential BOJ rate hikes, it's hard to see the yen appreciating in the long term without a more pronounced slowdown in the US economy. Nonetheless, the trend for now remains skewed to the downside, so we will need some confirmation from the technical side to start looking for more upside or discard the idea. Now, on the daily chart, we can see that USDJPY rejected the broken trend line around the 149 handle, where we had also the 38.2% Fibonacci retracement level for confluence. That's where the seller stepped in to position for a drop into the 140 handle. The buyers will want to see the price breaking above the 149 handle to gain more conviction to position for a rally into new highs. On the 4-hour chart, we can see that the price probed a little above the downward trend line last week, but eventually got smacked back down and fell even more as the price broke below this counter trend line around the 147.60 level. The price has now pulled back to the downward trend line, and this is where we can expect the sellers to step in again with a defined risk above the trend line to position for a drop into the 140 handle. The buyers, on the other hand, will want to see the price breaking higher to gain even more control and position for a break above the 149 handle. On the 1-hour chart, we can see that the price returned inside the previous range between the 146 support and the 148 resistance. The resistance zone is right around the downward trend line, so the sellers will have a nice barrier where to protect their stops. We have also a minor counter trend line here around the support, so a break below it should see the bearish momentum increasing as the sellers will pile in more aggressively. The buyers, on the other hand, will need the price to break above the 148 resistance here to start targeting new highs. These red lines define the average daily range for today. For the upcoming catalysts, on Thursday we get the US jobless claims figures and the US PMIs. On Friday, we conclude with the Japanese CPI and Fetcher Powell speaking at the Jackson Hole Symposium.